Hey everyone, happy Monday. Welcome back to my channel. I'm Caitlin McKegg. I am a Phoenix real estate broker. If you're not new here, you know what I'm here for today, talking about what's going on in the Phoenix real estate market. And if you are new, welcome to my channel. I'm here every week talking about what's going on in Phoenix real estate and giving you tips and all that good stuff as it relates to living in Phoenix, etc. So thanks for joining me. Today I have a lot to cover. We had a big week in the economy last week, and we have a lot of information to share today as it relates to what's going on in the Phoenix real estate market as well. Demand is not in a good place, not getting better, and I'm going to talk more about that in a second. First of all of this information is from the Cromford report, or quite a bit of it is, at least as it relates to Phoenix real estate. I'm a subscriber to the Cromford report, so thank you to them for giving us all this awesome information. All right, guys, let's pull this up and talk about what's going on. So the big headline I have here, Fed hikes rates another 0.75%, citing inflation. This isn't a huge surprise. They've been talking about this number. At first it was going to be a full percentage, then they backed off to 75 basis points. We all knew this was coming. The markets priced it in. It wasn't a huge shock. However, it does affect how we move forward in the economy as it relates to lending rates, and ultimately affects mortgage rates. But I have some good news on that front. In addition, we got information that the US GDP fell at 0.9% annual rate in the second quarter. Recession fears loom over economy. So this is the second quarter in a row where we've seen that that rate decline, or the contraction. And so by some definitions, that means we're already in a recession. People kind of argue back and forth about that. I'm not going to say that that's essentially true, but clearly the writing is on the wall. That is kind of where we're at the moment, where we're heading. We also got the PCE numbers. So June core PCE signals inflation remains at unacceptable level. This came in at 6.8%. The PCE is the personal consumption expenditures, and so that basically is looking at inflation but taking out the volatile measures like food and energy costs. Bottom line, that story is no better than the inflation numbers that we got a few weeks ago, and so the Fed is going to continue to raise the funds rate to fight inflation and do everything that they can to stop the inflation that we have currently. So that's kind of the story of where rates are at in the economy. None of this is super shocking. We've kind of known that this is the path that we're on. But here's the good news. This article here, it's possible that mortgage rates have topped off. Latest tumble, a sign of hope amid jumbled up housing market. So we actually ended the week last week. And again, I'm not a mortgage lender, but I do have some great sources helping me out here. We ended the week at the best rates we've seen since May 31st. So that's good news on the mortgage rate front. And essentially what happened is the Fed raised the interest rate, and the markets and investors really liked that. And so it then affected mortgage rates in the opposite way. So we saw some good mortgage rates at the end of the week. How long that stays is anyone's guess. But this article is talking a bit about that. They're saying that according to Freddie Mac on Thursday, the 30-year fixed rate is around 5.3%, down from 5.54 last week. And however, the sad news is that a year ago, that rate was about 2.8. So we'll just pretend we didn't hear that, right? Moving on. Pending home sales tumble as more buyers get priced out. So this article here is from the National Association of Realtors. So this is looking at real estate from a national level. This is not specific to Phoenix, this article here. However, it's talking about how the amount of demand is really going down on a national scale, largely due to interest rates. They're saying that the median existing home price hit an all-time high in June of $416,000. Homes were 80% more expensive in June than they were in 2019. And they have a pretty interesting stat here saying that nearly a quarter of home buyers who purchased a home 3 years ago would be unable to qualify to buy a median priced home at today's elevated prices. Again, that's looking on a national scale, but that's pretty shocking of where we've gotten ourselves into in terms of home values and prices, and then obviously we have our interest rates on top of that. So Not surprising, but still not encouraging news to hear. They're saying that the pending home sales index, a forward-looking indicator of home sales, posted an 8.6% decline in June compared to May. Pending home sales are down 20% compared to a year ago. Again, that's all looking nationally. That's not specific to Phoenix, but we are certainly feeling the same thing here, which is what I'm about to get into. So now we're switching gears, okay? We're looking specifically at Phoenix, not nationally. So the sales rate. So we're looking at how many homes are selling every month. And over the last 2 years, we've been hitting records as far as those numbers go here in Phoenix. Right now, we're sitting for July, 6,707, and that is down 25% year over year. That's the lowest number we've seen since for the end of July since 2014. So it's been a bit since we've seen sales volume this low. And keep in mind, this happened really quickly. All of this just changed over the last 3 months. We went from record setting to going back to 2014 levels. So it's been a pretty intense slam on the brakes, for lack of a better description there. Now, talking about new listings, I've been talking about how we've been seeing so many new listings hit the market, and that's been true for the last couple months. We're finally starting to see that ease off. Nothing huge, but we're starting to see that decrease just a bit. So in the last 7 days, we had 2,589 new listings hit the market. Now that number has come down from what we've seen in previous weeks. It's actually up 5.8% though, if we look at a year over year comparison. So we're still getting a lot of new listings in the last week compared to what we were used to. But since we started to see that run up, no, Siri, I don't want to talk. Since we started to see that run up in active listings hitting the market, this number has actually softened. So we hit our peak. That was about 3,169 new listings hit the market in a 7-day period, and that was on June 25th. Since then, we've not had that many new listings come on the market in a 7-day period. So that's encouraging. What we really need to remember is that having all of these new listings hit the market so quickly with the buyer demand that we don't have right now is not helping prices. Well, it's helping prices if you're looking for them to come down, but it's not helping home values to stay stable. It's decreasing prices. It's really softening our market. And so a rush of new listings without anyone to buy them will decrease prices. And we're kind of starting to see that stop, which is good because it might bring us more to stabilization rather than headed into, a crazy direction. So we'll see what happens there. Talking about demand, this is where things are definitely changing. 7,887 homes under contract. That is down 28% year over year. Again, we know that the sales rate that I talked about earlier is lower, and then the number of homes going under contract is lower because we just don't have as many buyers out there with the interest rates that we have right now. This is the lowest end of July that we've seen since 2007. So there's those scary years coming back again. Those are the years that we don't want our data to be compared to or be on par with, right? Because that was not a good outcome. So interesting to see that the number of homes under contract is low and down 28% from last year. Closest in the past was 2007. So thought that was an interesting stat to share that really is reflecting where we're at in terms of demand. Now, as all of this demand is softening, we're also seeing softening prices. There's a few different ways to look at pricing. Today, I'm talking about the monthly average sales price per square foot, and I'm also just talking about Phoenix here. I'm not breaking this down for every city. The reason I'm talking about Phoenix is because it has the weakest monthly average sales price per square foot, and it's also, Phoenix is equal to 25% of our entire metro market. So it's important track this, it's a big chunk. And if that has the weakest average sales price per square foot, that's certainly going to affect where we're at, as a whole in the metro area. So we hit our peak of average sales price per square foot in May, and that was $323.83. And we have declined since. We've seen a decline of 5% since May. So it's a pretty big change in such a short period of time. Like I said, Phoenix accounts for 25% of the entire market here, and it's the weakest monthly average sales price per square foot that we have in any of the major cities throughout the valley. Now I have all of these cities down here in red. The reason, that was a horrible box, I'm just gonna take that off. The reason I have all of those is because they are following Phoenix closely behind. I'm not sharing every single number for their monthly average sales price per square foot, but those that group of cities here is the weakest number, or the weakest cities that we see next to Phoenix. So Chandler, Glendale, Mesa, Scottsdale, Sun City, and Tempe have all seen the biggest decline in their average sales price per square foot since the market has begun to shift. So do with that information as you will, whether you're a buyer or a seller. It could be good, could be bad. Moving on to our Cromford Market Index. So if you're new here, I'll describe this really quickly. The Cromford report has come up with an algorithm that looks at supply and demand in our market, and they have assigned a value of anywhere between 90 to 110 to be a normal range. Anything above 110 is a seller's market, and anything below 90 is a buyer's market. And so this number is what we're looking at right here, 126. This is technically still a buyer's market, or I'm sorry, a seller's market, but that number was sitting at 450 back in April, May. So we've had an extreme change. Again, still technically a seller's market, but it sure doesn't feel like that compared to what we were used to. We are sitting at demand of 81.5, and this continues to go down. So that's about 19-ish% below normal if 100 is normal. And then for our supply, we're still on the low side, but that has been climbing a ton. As I said a few minutes ago, that might start to slow down, but this number at 64.7, that means that we're about 36% below normal for supply. Again, if we look back in time to the April-May timeframe, this demand index was about 120. So we were 20% above normal. The supply index was about 25. So we were about 75% below normal. So we had above normal demand, below normal supply, and that was what was increasing prices. None of that is true anymore. We have the opposite situation happening. Now, this is a breakdown of all of the major cities that we have here in Phoenix and what their CMIs are here in this chart over here. And I have a few things to point out. So first of all, this 32%, if you guys have been watching my videos, you know what I'm probably going to say here. The amount of change that we've seen over the last month with all of these cities, the average has been 32%. And the last few weeks, it's been 34%. So we've started to see a decrease in how quickly the CMI on average is changing. So again, depending on your perspective, if you're hoping for a crash, that's not good news for you. But if you're hoping for some stabilization, that is good news that we're not continuing to just fly in this downward trajectory. We're actually starting to level out a little bit. It's still really decreasing a lot, but we're starting to see a slowdown in how quickly it's decreasing. We have these three cities here at the bottom: Maricopa, Queen Creek, that's a tough one to say sometimes, and Buckeye. I have them circled. The reason these are circled is because these are all buyers markets. I can't write either. Goodness, what is going on today? These are all buyers markets, and these numbers here, if you were looking for a home 3 months ago in any of those cities, you had the option of a whopping 675 homes to choose from, and today you have 2,243 homes to choose from. So this buyer's market in these cities is really awesome for a buyer because not only do you have leverage, but you also have a lot of choices, especially compared to what we were looking at previously. Now, the next section here that I have sectioned off like that, we have Peoria, Chandler, Surprise, Tempe, and Gilbert. All of those are in a balanced market technically. However, the Cromford report is anticipating that by mid-August, all of those cities will be in a buyer's market as well. So keep that in mind if you're thinking of buying or selling in any of those cities. And then these highlighted cities that I have here, Mesa, Phoenix, and Glendale, all of those they're anticipating will be in a buyer's market by the end of August. So basically everything from this line down, if you are in any of those cities thinking of buying or selling, you're looking at the future of a buyer's market within a month, pretty much, or you're already in one. So depending on your situation, it could be good, it could be bad. Just keep that in mind. And you know what? That's all I have for today. So bottom line, demand is down and it's going down, and it's not just here in Phoenix, it's all across the nation. Our supply has increased, but it is not increasing quite as quickly as it was before. Overall, the market's been softening. We do have some cities that are still in a technical seller's market, but let's be honest, there's really nothing that's selling within hours or days anymore. Everything is kind of sitting on the market. So as a buyer, that's good news for you. As a seller, maybe not the best news, but it is important that you're pricing correctly and doing a lot of things to prepare the home for sale to make sure that it's not a long, drawn-out process for you if you need to sell. If you have any questions, you know where to find me. Check the description below. I have a link to set up a time to chat, and my contact information is listed in there as well if you'd like to reach out with questions anytime by call, text, or email. Thanks so much for watching this video. I hope the information is helpful, and I will see you guys next week with another market update. I'm Caitlin McKeag with the Desert Dreamers team at HomeSmart.